Have you ever imagined waking up one morning and realizing that a currency once considered nearly worthless suddenly turned into one of the most valuable in the world? Well, what if I told you that moment might be closer than most people think? Because new reports are coming in from multiple credible sources suggesting that the long-awaited Iraqi Dinar revaluation could finally be entering its final testing phase, with a rate being spotted as high as $3.25 per dinar. Yes, you heard that right. $3.25, and this information has sparked an absolute storm of speculation among investors, currency watchers, and global economists. So if you've been following the Dinar RV journey for years, or even if you're just curious about why the world suddenly seems to be talking about Iraq's currency again, stay with me till the end, because what's happening right now might be the biggest shift we've seen in the foreign exchange markets in more than a decade. Now, before diving deeper, remember that none of this is financial advice. This is about understanding the signals, the patterns, and the insider reports surfacing from within Iraq's financial sector that are painting a picture of change, unlike anything we've seen since the early 2000s. It all starts with the Central Bank of Iraq's quiet yet powerful movements. Over the past few months, particularly the implementation of new digital financial systems and the final phase of electronic testing between Iraq's internal banking networks and international exchange systems. Analysts close to the matter believe that these final tests are precisely the kind of technical groundwork required before a rate adjustment becomes public. This means we're not just dealing with rumors anymore, but with actual systemic changes being observed in real time. And that's where the 325 figure suddenly starts to make sense. According to internal leaks and monitored transaction simulations, certain bank screens in test environments have been displaying this new rate, but only during limited trial periods, almost like a stress test for the financial system. The idea behind such testing is simple. Before making any global announcement, the system must prove it can handle the massive influx of transactions and currency exchanges that would occur once the dinar officially revalues. Iraq's economy has been under transformation since the country began pushing toward a more open market model, reducing its dependency on oil and boosting its gold and foreign reserve holdings, which have now reached some of the highest levels in the country's history. All these factors play directly into the credibility of the 325 figure. What's more, international watchdogs have noted a series of high-level meetings between Iraq's central banking officials and representatives from the IMF, World Bank, and U.S. Treasury, all focused on currency stabilization and international reintegration, two phrases that almost always precede a formal rate change. Even more interesting is that Iraq recently completed full compliance with global anti-money laundering and digital transaction security protocols, something it has struggled to meet for years, and that compliance could be the last box ticked before an official announcement. What's happening behind the scenes right now feels different, and even longtime skeptics are starting to admit that the level of activity, the transparency of financial reports, and the new tone coming from Baghdad indicates something is brewing. Some investors speculate that this revaluation could coincide with Iraq's long-term plan to join the BRICS payment system or at least integrate more closely with Eastern trade routes, while others think it's more likely tied to Western support for Iraq's post-sanctions modernization. Either way, the idea of Iraq returning to its pre-war currency strength is no longer being laughed off. It's being studied seriously. Imagine for a second how global markets would react if the dinar truly opened at $3.25 per unit. That would place Iraq's currency stronger than the US dollar, rivaling even the Kuwaiti dinar, and overnight, it would create a wave of wealth redistribution unlike anything we've seen in modern history. It would also redefine Iraq's position in global trade, giving it massive leverage in oil pricing and foreign investment negotiations. And this is exactly why so many eyes are now fixed on the final testing updates, watching every minor change in Iraq's banking communication systems, waiting for that official confirmation that could send shockwaves through the Forex world. So don't scroll away, because in the next segment, we're going to dig deeper into what exactly is causing this sudden confidence in Iraq's currency and how this $3.25 rate could completely reshape global financial dynamics. But before we move on, make sure you hit that like button, subscribe, and turn on notifications, because if this RV is really happening, you'll want to be the first to know every single update as it unfolds. As we continue uncovering what could be one of the most significant currency stories of the decade, the deeper we look, the more it becomes clear that Iraq's financial system is not just being repaired, it's being reborn from the ground up. For years, the Iraqi dinar was held down by outdated systems, corruption, and external control. But over the past 2 years, we've seen a pattern of reforms that all point toward one direction: restoring Iraq's economic sovereignty. Let's start with what's been quietly happening in the background. The Central Bank of Iraq has been upgrading its interbank communication framework to connect directly with the global SWIFT network, something that was nearly impossible for the country during the sanctions era. This direct integration allows Iraq to handle international settlements, digital transfers, and currency conversions with precision and transparency, eliminating one of the biggest barriers that prevented a higher exchange rate. Then, there's the newly implemented real-time gross settlement system that enables instant transfers and validation between government institutions, commercial banks, and international partners. This level of modernization is not just technical, it's foundational. It proves Iraq is preparing for a new monetary reality, one that supports a stronger currency capable of competing on the world stage. Now, let's talk about that 3.25 rate, the figure that has everyone talking. Why does this number make sense? And why are so many insiders pointing to it as the potential final value after revaluation? Historically, Iraq's dinar before the 1990s conflict was valued at around 322 to 335 against the US dollar, reflecting the country's massive oil reserves, strong GDP, and gold backing. If Iraq were to restore its pre-war economic value, the math aligns almost perfectly with the $3.25 figure now showing up in test systems. But what's more important than history is the present-day justification. Iraq now sits on the 5th largest proven oil reserves in the world, and global demand for oil remains high despite renewable transitions. With crude prices fluctuating above $80 per barrel and Iraq's production steadily increasing, its oil-backed economy has regained credibility. Combine that with Iraq's expanding foreign exchange reserves, now exceeding $100 billion according to recent financial bulletins, and you have a nation with one of the strongest reserve-to-debt ratios in the Middle East. Economically, this gives the central bank a solid foundation to sustain a higher exchange rate once it is released. But the move toward a potential revaluation isn't purely financial. It's also deeply strategic. Iraq's leadership has been signaling its intent to reduce dependency on the US dollar, not by rejecting Western partnerships, but by balancing them with new regional alliances. The government has signed multiple agreements with China, India, and Russia to settle part of their oil trades in local currencies or digital equivalents, a shift that aligns perfectly with global de-dollarization trends. When you connect all these dots, the technological upgrades, the rise in foreign reserves, the international partnerships, and the growing investor confidence, it starts to look less like rumor and more like a calculated preparation phase. The mention of final testing by multiple sources might very well indicate that Iraq's financial infrastructure has reached the readiness stage, where all systems are synchronized, tested, and verified before an official revaluation can be executed. One thing to note is how quiet yet deliberate the communication has been from Iraq's financial officials. Instead of hype or big public statements, they've maintained calm, controlled updates, usually through government bulletins or IMF meeting notes, which is exactly how major monetary adjustments are handled before they go live. Behind the scenes, sources claim that currency testing is being done using simulated exchange environments that mirror real-world trade volumes. The 3.25 rate might be appearing in these tests to check the system's stability under high transaction load. If those tests succeed, and early reports suggest they have, then it's only a matter of timing before public announcements follow. Another key indicator is the activity in Iraq's international bond market. Investors are quietly increasing their positions, suggesting that large institutions anticipate a favorable shift in Iraq's currency value. Even U.S. financial analysts, who once dismissed the Dinar RV as a fantasy, are starting to include it in speculative forecast models for 2025, citing the convergence of technical readiness and macroeconomic stability as reasons it could actually happen this time. This entire development is not just about numbers. It's about Iraq reclaiming its rightful place in global economics. A revalued dinar would not only strengthen Iraq's purchasing power, but also attract billions in foreign direct investment, opening the floodgates for construction, trade, and infrastructure expansion. For ordinary Iraqis, it could mean more affordable imports, stronger savings, and renewed financial confidence after decades of instability. For investors around the world, particularly those who've held on to the dinar for years, this moment could represent the turning point they've been waiting for. But as with all major shifts, timing is everything, and no one knows the exact hour or day this might happen. Still, the alignment of all these signs, technological readiness, monetary reform, international compliance, and test rate leaks, suggests that the finish line is closer than ever before. So stay tuned, because in the next part, we're going to explore what this potential 3.25 revaluation could mean for the global economy, how it could ripple through oil markets, and why some experts believe this single event might mark the beginning of a completely new era in world finance. Before we move forward, make sure you drop a like. If you're finding this information valuable, subscribe to stay connected to every upcoming update, and share this video so others don't miss what could be the biggest financial shift of 2025. Now imagine just for a moment what happens if this 3.25 rate officially becomes a reality. The impact would ripple across the global financial landscape almost instantly. Forex markets would light up as traders scrambled to adjust portfolios, banks would start recalculating their currency reserves, and international corporations operating in Iraq would see their balance sheets transform overnight. A country once viewed as an unstable investment zone would suddenly become a magnet for global capital. Oil contracts, trade deals, and infrastructure projects would all be renegotiated under a new financial framework that values Iraq on par with some of the world's strongest economies. This is not just a revaluation, it's a redefinition of economic power in the Middle East. And that's precisely why financial analysts from London to New York are watching Iraq's next moves so carefully. If this rate goes live, it wouldn't just change the Iraqi dinar, it would change how the world values oil-backed currencies, and possibly even spark a chain reaction of rebalancing among nations that hold large energy reserves. You see, the global economy thrives on perception and confidence. When a nation's currency suddenly appreciates in value, it signals trust, growth, and strategic alignment. For Iraq, this would mark the beginning of a long-awaited comeback story. Investors would rush in to secure opportunities in construction, energy, banking, and digital finance. The government could finally fund national projects without relying on external debt, and ordinary citizens would feel the impact in their day-to-day lives. Salaries, savings, and pensions would all carry more weight, creating a renewed sense of hope for a nation that has struggled for decades under inflation and uncertainty. More importantly, Iraq would no longer be seen as a follower in the global economic system, but as an active participant with a currency that demands respect. The 3.25 rate, if sustained, would place the dinar as one of the highest valued currencies globally, second only to the Kuwaiti dinar, which would send a clear message that Iraq's reconstruction has reached a level of maturity the world can no longer ignore. But here's where things get even more interesting. Economists are debating whether this potential revaluation could trigger a domino effect in regional markets. Neighboring countries such as Iran, Turkey, and Saudi Arabia would immediately feel the economic shift. Oil trade settlements could start moving away from the dollar in favor of regional currencies, especially if Iraq continues to strengthen its financial ties with China, Russia, and the BRICS economic bloc. This would accelerate the ongoing global trend of de-dollarization, challenging the traditional dominance of the US dollar in international trade. However, it's not necessarily bad news for the US. In fact, Some believe this could open a new chapter of collaboration between Iraq and Western financial institutions, allowing U.S. investors to gain from Iraq's economic boom through equities, oil contracts, and reconstruction deals. The potential wealth creation here is massive, but so are the risks. If the revaluation happens too quickly or without proper safeguards, inflationary pressure could build within Iraq's domestic market. That's why the central bank's gradual testing phase and controlled simulations make so much sense. They're ensuring the system can handle the surge before making anything official. From a global investment standpoint, this move could redefine speculative currency trading as we know it. For over a decade, the Dinar RV community has been dismissed as a myth, something people joked about in online forums. But today, those same conversations are being echoed in serious financial circles. Institutional investors who once ignored the Iraqi market are now watching every signal. The narrative has shifted from if it happens to when it happens. The 3.25 figure has given the discussion a tangible anchor, a number that represents possibility, anticipation, and a renewed faith in Iraq's economic future. When we look at how financial systems evolve, major turning points often begin quietly before exploding into the mainstream, and this could be one of those moments. The next time you see a currency chart flashing updates, remember that beneath every number is a story of politics, policy, and people working to redefine their nation's destiny. For those who've been following the Dinar RV journey for years, patience has been the hardest part, but it might soon pay off in ways few imagined. If this rate goes public, early holders of the dinar could see life-changing returns, and Iraq could finally shed the image of a post-war economy, stepping into a new era of stability and growth. The country's modernization efforts, from digital banking to international trade reforms, all point to one thing: preparation for a stronger, more stable financial identity. Whether you believe in the revaluation or not, the evidence of change is undeniable. Iraq's economic transformation is no longer theoretical. It's visible, measurable, and accelerating. The question is no longer if, but when the world will finally see the full reveal. And when that moment arrives, it won't just rewrite Iraq's financial history, it could reshape global monetary dynamics for years to come. So, as we wrap up, I want you to think about this. Every great financial shift in history started with disbelief, then curiosity, then confirmation. Right now, we're standing in that middle stage, where rumors start becoming reports, and reports start turning into real data. Whether the 3.25 rate becomes official tomorrow or months from now, one thing is certain: the Iraqi dinar is stepping into the spotlight, and the world is watching. So if you want to stay ahead of the curve and be among the first to know every confirmed update, make sure you hit that like button, subscribe, and turn on the notification bell right now, because when this rate finally goes live, you won't want to just hear about it. You'll want to understand it. Prepare for it and witness history being made in real time.